Hello, welcome to the Professional Service Firms Pricing Calculator. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome. Contributing to professional services firms' success. You know, there are thousands of professional service firms in Australia, cover accountants. Hopefully, your accounting firm has already subjected your firm to an overview of the calculation of the charge-out rates that are applicable. Bookkeepers, solicitors, barristers, valuers, engineers. There's a whole group that I've listed there, and there's probably many others. You've probably got a number of these firms as your clients. Do you sit down and talk to them about how they might analyse their performance, or how, more importantly, you could do it for them, so they can check the charge-out rates that they're charging their clients to make sure that they're based on their team's productivity, their overhead expenses, and their salary costs, and their targeted profit, not someone else's that they've overheard at a conference or in a bar somewhere, but they're calculated on the basis of what is suitable for their firm. So in that way, you'd be assisting your professional services clients to plan their business operations, probably a little bit more methodically than what they might be doing at present. So the first thing we need to look at is, how much profit do they want from their business? Now, sometimes you'll get that reaction, like just throw their arms in the air, and so they don't know. But at least I think we should try. So what do they think their business is worth, or their practice is worth? And what rate of return would they like to get for that investment? Bearing in mind there are risks in running any business, whether it's a professional service firm or not. So what rate of return are they looking for? And you could discuss with them then utilising the financial forecast, setting the charge-out rate, and then the ongoing financial management of their business throughout the year by you preparing monthly financial accounts, comparing it back to the budget target, which we're going to set by going through this charge-out rate determination, because we are setting a budget for their firm, because they've identified what their targeted profit is going to be. So where do we start? Very important. Professional services firms sell time in the main. They're selling the rewards from their team members, their partners and their employees, their efforts. What's the hours that are going to be able to be charged to clients? So who is the team? What is the classification of those team members? The first thing then to look at is calculating the on-costs. Now, in my experience, gained over many years in advising professional services firms, engineers, solicitors, architects, town planners, barristers, I found that many of them forget the overhead expenses that apply when they set their charge-out rates. They might say that they're not going to be paying the overhead expenses themselves, the on-costs, but if they've got employees, they'll be getting paid them. Superannuation, holiday pay loading, long service leave if they work with the business for that period of time that's been legislated in the various states. So determination of the on-costs is important, because overall, with a number of employees, that can be a big cost that I think is missed out in a lot of determinations of charge-out rates. So we could go through and look at what the allocation is going to be for professional development, special training, payments being made for superannuation, especially if it's higher than the gazetted amount that has to be paid for all team members. The number of holidays. Some firms enter into special arrangements for some extra responsibility and duties that instead of the normal 4 weeks leave, people might be allocated 5 or even 6 weeks leave because of extra work they've undertaken during the year. That needs to be factored in to a charge out rate calculation. So in that way, we can complete the calculation of labour on costs, which has been done for each category. In the system I'm going to show you, the calculator system, we have got 6 main categories available for full-time employees, and there's 6 lines in each. So we can have 36 variables of those matters that I just mentioned. I haven't come across any accountancy firm that has come back to me and said, we haven't got enough space in the system, Peter. We need more space because we've got different types of categories. You've got 36. And you've also got the same number for part-time employees and for casual employees. I think you've got enough. So we then want to look at the salaries and wages for individual team members. Now, if within a category they vary, you just keep on putting those people in as, in effect, a separate category of their wages. And the productivity percentages might also vary, because within a team classification of a group of professionals, certain of them may have been given additional workloads, and they've either been paid a different rate or their productivity is going to be significant different to the others in that category group. So we separate them. What are the working hours that's expected for these individual team members? And if there's a definite decision that certain people are going to work different hours, it might mean that some are only going to work, say, 1,200 hours a year because they're minding children or doing other special assignments. They might be going to uni and doing a further degree or some other postgraduate training, and allowance has been built in for that. So you make sure that's all covered so that you are able to determine a reasonable estimate of the total chargeable hours for each team member. And when it's added up, of course, you've got for the firm what the chargeable hours, because that's what the firm's earning its income on. Total chargeable hours for the individual categories. So that completes the calculation of the labour budget. And what that's also going to tell you is what labour is going to cost in this firm. The next one is the overhead expenses. So that's just a straight overhead budget of the expenses expected to be incurred in the normal course of business over the next 12 months. Now, if there's the possibility that there's going to be, for argument's sake, travelling and accommodation incurred, but you don't know how much that might be, but it is all recoverable from the client, but with no markup on it. So if the hotel and accommodation bill amounted to $1,000, that's what gets charged to the client, not a markup of 15%. You can just factor that into account when it's incurred. It's not going to affect the charge out rates. But if you had some silent or different income being created because the client was either manufacturing or producing a special product which they were then selling, or they were buying in products and services which they're then on charging to their client, and they were marking those activities up. They paid $1,000, but they're going to charge plus 15% when they invoice it to their client. You could utilise the tradie charge out rate calculator, which has built into it a calculator on the markups that are being applied, because they can then be utilised in the determination of the charge out rate. Some tradies factor the markup into the calculation of the labour rates. In other words, there's a discount offered on the labour rates, what they would have already been because of the markup on external purchases. But other firms say, no, that's ours. That's a super profit we're going to try to retain. Now, whether they can retain it in full depends on the marketplace as to whether they're able to charge those extra services. So out of all this, we get the budgeted overhead expenses for the financial year. So the total income from the sale of labour is the labour cost plus the return on investment, the profit that's been determined, and the overhead expenses. So that final figure is the amount that has to be recovered from the charge out rates. The calculator which ESS BizTools has developed, which you've got as part of your subscription package to ESS BizTools, will then determine the individual charge out rates to be utilised. And the system produces a proof of the charge out rates as a report, which identifies each individual team member, what their calculated productive hours are for the year, the productive percentage, and the charge out rate that our calculator has determined, and what the amount of income that will be earned from individual persons. That will be totaled, of course, and that amount in total will agree with that earlier target, which we said would be the cost of labour, the on-costs for labour, the overhead expenses, all added together. That's what the target is to earn in charging out of people for their professional services during the year. So the charge out rate calculator will give you that. You can then sit down with a client and look at that, and they might say, oh, we might do some fine tuning on this. We might put a bit more profit into the equation because we think those charge out rates are a little bit low from what we're hearing in the marketplace. That type of discussion can then take place to fine tune the result. So you set the charge out rates now and then monitor the performance each month. Prepare the profitability report, so the profit and loss accounts, analyze the performance, compare it back to the original calculations that you're doing now. Look at the productivity percentages that have been achieved by each team member. Does there need to be some fine tuning? Does there need to be some serious conversations with that person by the organisation's CEO, not directing that at you as the CFO type accountant performing that role, but they should be doing that themselves. But you would bring it to their attention that the target set for this particular team member is 80% productivity. They've only achieved 60%. Why? What's that variation for? There might be legitimate reasons. And it could mean, though, that it is desirable to do some fine tuning on the charge out rate calculator. Perhaps to adjust that person's charge out rate, or to look at flexing some of the others so that the overall profit target will be achieved. Now, if you don't do this on a month-by-month basis, you're probably going to get to the end of the financial year and say to the client, well, the target was to earn $150,000 profit, but you only made $30,000. And it's because the productivity percentages were not achieved, but you can see that you've known that every month, July, August, and September, and so on. You could quite easily see that the productivity was not being achieved. So there was the opportunity to sit down with the client and say to him or her or the team of the partners in the firm, why don't we revisit some of these charge out rates? Now, it might not be possible in all cases because the firm may have entered into some contracts for the supply of services at agreed rates. It's too late now to go back and change them. And that's one of the reasons this whole exercise needs to be seriously looked at and followed through. And before it's signed off, that there's been some close examination made with the client's team to make sure everyone understands the calculations that have been made and the performance milestones that have been put in place. Hopefully, though, everyone will be able to perform to their productivity percentage targets. There won't be any extra leave granted. People will produce their productive hours, and the firm will achieve its overall profitability targets. But in the real world, things always go a little bit different, don't they? And that's the real benefit of the preparation of a monthly set of accounts and a close examination being made of the key performance indicators, the business metrics, to make sure that there's an appreciation that some things changed, and then talking to your clients about whether they want some fine tuning made of these calculations. to try to pick up what might have been the problem this month, so it doesn't continue to affect the operations throughout the rest of the financial year. You still might have 10 months to go, and you would hate to have that problem continuing to occur throughout the year, because it might be for more than one team member, mightn't it? Your client might have 10 team members and 4 are producing below what was expected. Why? Can some changes be made? Can some duties be reallocated to some non-chargeable team members? Or do we need to change the budget? It's a conversation that needs to be held. And as the accountant, you need to take responsibility for making sure your client realizes the consequences of not achieving productivity targets. And that applies also just as much within your own firms, of course. So this exercise, I think you should be performing each month in your own firm. As Andrew Geddes said in one of our webinars last year, he thinks accountancy firms should be the first client of this process if you haven't been undertaking the use of the charge-out rate calculator before. Make your firm the first client and then implement within your firm what we are talking or suggesting that you would do with your clients. So our recommendation that productivity is being examined on an ongoing basis. Monitoring of the overhead expenses is also being conducted, because if suddenly there's a huge increase in a particular cost, whether it's electricity gets blamed for everything these days, but it's a cost that's significantly increasing. If it was not set at a high enough figure, do we need to make some changes so that a new charge out rate amount can then be determined? This ensures that there is an immediate reaction to assist your client to get as close as possible to the profit target for the year. Now, if you were the full-time chief financial officer working for this professional service firm, and some of them do have full-time accountants or chief financial officers, you would be monitoring productivity. You'd be monitoring all the overhead costs. You'd be monitoring how much income was being earned on the targeted hours, week by week, month by month, and bringing it to management's attention, the leadership team's attention, the variations that were being incurred, because you would be helping them to then make a decision. Well, we've got to change something. We're not going to just monitor on for 12 months at these charge out rates that we now know were calculated incorrectly. Not deliberately, but it's turned out they're not correct. Certain team members just cannot produce the hours of chargeable time that we originally thought they could. And we know there's good reasons. So we need to now see whether some fine tuning can be undertaken. Have we found out in the marketplace that we might be a bit low on some of our charges? Okay, we can now adjust it. Okay. So that's the charge out rates. The tools for you within ESS BIZTOOLS is that you have a paper that we've produced, which I'm going to go to in a moment, paper 210-020, which gives you some guidance on some of the matters you may discuss with your clients about this overall exercise of how do they get their professional services firm to be shipshape and achieving the targets that have been set. So we're now going to go to the members homepage of ESS BIZTOOLS, which is now on your website. And I'm going to take you to the budget. So on the left-hand side here, I hope you're all familiar with this set out. This is the ESS BIZTOOLS website. As you know, we have 4 components, 4 key product packages: advisory intro, starter package, advanced package, and financial forecasting package. They come up in steps. So everything that's in advisory intro is in the starter package. Everything that's in the starter package is in the advanced package, and everything that's in the advanced package is in the financial forecasting package. And obviously at each step up the ladder, there's more information being added in any case. So that the financial forecasting package is the ultimate package, we think, for offering the type of services that we advocate to SMEs, but it's been prepared on the basis of step by step by step to get there. So I want to go to the budgets and cash flow forecast, which is in the subscribe content. There's various examples of the systems in operation that we have available. You can go on and click onto those and watch them. So here's the one for the professional fee calculator. I'm not going to that today, but it has been pre-worked. You can click on and watch it. As you can also click on and watch the setting retail price calculator and the setting tradie price calculator. We'll go to the bottom. We'll just download that content. And I'm just going to go through here and first of all find the paper, which is paper 210-020, fee setting for professionals. So we're going to bring that so this is the paper setting charge fee setting for professionals. Setting professional fee rates is a difficult step. We've gone through and looked at a lot of that. Fee rates can determine profit or loss. Looking at some of the charge out rate fallacies. Cost is not the only thing that clients worry about. You could look at that and use some of those notes there to discuss with your client. Services are important. And we've got a link to another paper, Development of a Business Advisory Enterprise, which you might like to read. Competitors' intelligence files. Some firms keep these so that they're analysing, and every 3 months they sit down and have a look at what they've collected, where they've looked at their competitors. What are their competitors doing? What changes could they make in their marketplace? And there's a link to a paper on competitors. What are the practices overheads? What do you need to be bringing into account? How do you differentiate your practice? And obviously this is directed at your client. Looking at the labour productivity that we just talked about before. Looking at target and net profit. Looking at the labour on costs, including non-service leave. These are the calculations that you can see in that link that I showed you just before when I said that we did have a calculator that's been prepared for professional service firms. These are the sums that are included in that you can look at. There's plenty of material for you to go through and look at and make sure that you're covering everything when you sit down and prepare the calculations for your team members. So if you haven't read this paper before, I'd suggest that you do so that you're able to follow through and work through all this material. Now, I'm just going to remove that. And I also now want to find the form. So I'm going to bring that form up. So this is the professional fee calculator that you would use. You identify the name. There's an instructions manual available that you can work through. Let's go back to the beginning. So you could go through and read that so you understand how the calculations are being utilised. We've got the calculation of labour on costs. This is what I was referring to earlier. In the full-time employees, which is A1 classification, there are 6 of these categories. There's 6 lines in each of them. So you can have variable situations. So if you had someone that was being paid 25 days annual leave instead of 20, you would have them on a separate line in the calculations. But what we're trying to calculate here is what is the overhead factor for each group of employees. So you go through and do that. And we have similar charts there for use with casual and semi-permanents. We can then move through to the labour budget. So the classification that you put into A1 or A2 or A3, the various reference numbers would then get transferred. You would type in here sorry, I've said that around the wrong way. The percentages are transferred across. You complete what's in the yellow, so it's the number of people, what the individual gross salary is. System will calculate the total. The labour on-cost percentage has been transferred from the on-cost calculation. So you've got a labour on-cost figure. So that will give an individual's labour costs. The details of hours that they're not going to be paid, or they're not going to be working for, so that we would determine the individual net hours worked. The productivity percentage you need to insert based on discussions you've had with the client. System will then calculate the number of work hours, total hours, and the total hours to be charged. Then the system does the same thing on permanent part-time employees and on casual staff and determines the totals. It will determine the total practice productivity percentage, and you can then insert what you believe the investment in the business is, what it's worth, what the targeted rate of return is. In other words, what's the profit? We can then go to the overhead expenses. At one stage, we used to go through and set out the overhead expenses, but they vary very firm. You go through and type them out. It's a budget and total it, of course. And then the system will determine the targeted income. What's the total labour cost, including the on-cost? That's figure 13 that's now transferred in. What's the targeted profit from figure 14? What's the overhead expenses, figure 15? That's the total. If you're going to budget for write-offs, and I don't like anyone doing that, but if they're going to, put that figure in, and that will be the total income to be recovered. The calculation of time costs, the computer then does its work and will go through these and determine the ratios and will determine charge out rates for those various categories. And then you'll get a proof of charge out rate calculator that I referred to earlier. So it will again list in detail in the same order that was in A1 and then A2 and so on, the hourly charge out rate, the chargeable hours, and what's the total income to be produced. And it will go through and total that at the end with the the part-time and the casual employees as well. So you'll have a total income figure. And the system will then produce the overall budget and profitability report. The professional fees are calculated. If there's been an allowance put in for write-offs, that will go in. The net professional fees are calculated, less the labour on cost and the total labour and on cost. The gross profit less the overhead expenses. This is the profitability that should be achieved. That should be achieved to the target. The only variation would be the allowance for write-offs. Now, you may have adjusted your targeted profitability to reflect the allowance for write-offs. That's up to you in the fine-tuning. So that's the report. You can then sit down and show your client and get their agreement that that's what their target should be. Whether you're going to actually do a complete review of that to determine any variations on a monthly basis, that's up to you. Maybe you only need to do that every quarter, but just to make sure that things are picked up. So the key giveaways will be productivity percentages. So I think you should each week, if you can, but definitely monthly, make sure there's been an analysis of the productivity percentage. What was the total labour charged and which categories? So does the income reconcile with your calculations here on a monthly basis? If it does, you're probably okay. So that's the profitability targets that can be built into this system. You've got it all within the system that ESS BizTools is providing to you as subscribers. Please use it with your clients. Also use the tradie charge out rate calculator, which last week in a special webinar, Amanda Gascoigne, a well-known accounting industry consultant and mentor, indicated that I love the tradie charge out rate calculator, she said. It's absolute gold. So Amanda uses it in discussions with the firms that she's supporting and mentoring. I hope that you are also, because it gives a great deal of information for your professional services clients to be able to ensure that what they're doing will earn their targeted profit. Thank you for your support of ESS BizTools. If you have any questions on any aspect of what I've discussed in this webinar, please contact me. Send me an email, peter@essbiztools.com.au. Stay safe. Have a great day. Goodbye. I'll talk to you again in the near future.